I fully support the mission of the Nelson Nash Institute, but there is a culture of fear. They didn't like what I was saying. I got called a lot of names. They summarily kicked me out. I was emotionally traumatized. I was bullied. And I'm still afraid, honestly, Caleb.
What are you afraid of?
I'm afraid of...
You're like more known for convertible term than anything else. And that's because of the philosophy around human life value.
What is human life value? So the insurance company, they look at you and they're not going to give you an unlimited amount of death benefit. They measure it by the insurance company is deliberately underestimating your human life value because they're the ones on the hook to pay if you die. This is the loss that I'm protecting against.
All right, Logan, welcome to the BetterWealth show. I feel like we had a show pre-show because we're talking about all the things that we're going to talk about. And so let's hopefully you can remember all the nuggets that you were dropping before the show started.
Yeah, I'm super excited, greatly honored and privileged to be on your show, Caleb. I think the work you're doing is amazing. I hope someday I'll have a small percentage of the success that you have. But I really appreciate what you do and the abundance mindset you had, and having someone like me on the show where you're clearly doing me a favor, not the other way around. I really appreciate that.
You say that, Logan, but I love the way that you think. When we first got on, we were talking about the ways to measure true value of life insurance. And it's interesting because we're both working on a similar project. We're going about it a little bit of a different way, but the essence is life insurance is so much more valuable than the internal rate of return. And I find that a lot of times when people badmouth insurance, or even in the infinite banking community where we're talking about arbitrage, we're like getting it wrong. Does life insurance give you arbitrage if you understand all the benefits? Yes, because what we're essentially saying is life insurance, if you understand all the benefits, is far greater value than the cost of borrowing against that cash value. But does that mean that the internal rate of return itself is going to be greater? Most likely not. And I personally would feel uncomfortable promoting that and pitching that. And it's interesting because I'm working on a project and then you came on and are talking about that. So I definitely want to touch on that on today's episode. We got together originally because of the infinite banking practitioner program. I made a video. I think it was after Chris Noggle challenged me, and I made a video. We connected. I actually came on your show and we talked about that. And I would love if you're open to just share your philosophy around what you like, maybe what you don't like about the practitioner program, and where you see the whole infinite banking message going. And then one thing that we can also end on is convertible term. You're a big fan of human life value. You have a 3-step process on how you help people, like you elevate the value of locking in a permanent death benefit. And I think we need more people talking about that. So I'm sure there's probably more that we can talk about, but why don't you just give like a little bit of context on who you are? And then let's start with maybe the infinite banking practitioner program and just where infinite banking right now is headed in your opinion.
You want the juicy stuff first. So yeah,
hey, we gotta sell. We gotta sell the viewers, man.
Well, I think it'll be useful to agents. I don't know so much about customers, which is who I'm trying to talk to. But yeah, I mean, so first of all, the name is Logan Hertz. Hazeltine LLC is my business. I started it in the wake of COVID, had no idea what I was doing in terms of being a business owner, but had learned about a lot of these concepts, particularly infinite banking concept. And COVID kind of gave me the push out the door to do something I'd been toying with, which was to start a business. I'll share a little bit of personal details. I've been struggling for many years with really serious and really mysterious health issues that have been very frustrating, limited me in many ways, caused a lot of emotional distress. And that's honestly the only reason I started a business, is because I had to walk away from a full-time job. I just could not keep that schedule. So those struggles continue. I appreciate anyone prayers and support, greatly appreciate it. I certainly need it. That struggle continues in the background. And I want to talk about it a little bit because I think a lot of people, unfortunately, have had similar stories. And I think it builds sympathy that there is a human being here. It's not just about ideas. I don't understand why people get so upset and call me so many horrible names and threaten violence against me just because I'm talking about a financial strategy they don't agree with. I don't.
You have people threatened you with violence because you talk about whole life?
Yes. Yep. There's a publicly available comment that said that threatened violence against me. Right.
Wow.
So.
I always the hate comments always humble me so much. I love reading them. If you're ever feeling good about yourself, just read. It grounds you, which I think is healthy. I actually am very grateful. I'm not even saying that jokingly, but I don't think I've ever been threatened with violence. I've obviously had people say really bad things about me, but yeah, I'm sorry that you experienced that. Okay, so let's talk about how you learned about infinite banking. Like where were you when you first understood this, and then like what was like the light bulb moment for you?
Yeah, good question. I started when I was just starting off learning about what I should do with my money very early in my career. And the standard answers that I got about buying mutual funds and putting money in retirement accounts, none of that ever made any sense to me. And so I was just keeping all my money in a savings account because I didn't see anything better. And eventually I was exploring alternatives. And in one of those forums events, I can't remember what it was, someone was asked if you could tell people one thing about their money, what would it be? And they said, I would tell people replace your bank account with dividend paying whole life insurance. I had never heard of whole life insurance. I had no idea what it was. And life insurance that pays you, I thought it was the other way around with insurance, you know. So that started me going down a rabbit hole that took about 3 years. I don't recall there being any specific light bulb moment, to be honest with you, but eventually I got to the point where I felt like I was comfortable. I learned about it and I wanted to start doing it. And then I eventually, multiple years later, decided that I wanted to turn it into a business. And actually, when I started my business, I had an investment newsletter as well. And I thought that was really going to be the flagship product. But over time, it became infinite banking just based on customer feedback and where the money, where the revenue was coming from. So eventually, I shuttered my investment newsletter and switched to making infinite banking my main specialty.
And do you remember the aha moment where you're just like, oh, like this is going to be good? Because we have similar stories from the standpoint of like when I got into the money space, I wanted to be like into hedge fund, into helping people invest. When I learned about insurance, trust me, guys, I never wanted to be the insurance guy. Wasn't on my vision board as a teenager. But
right.
I think one of the things that really drew me to this is I felt like it was such a misunderstood asset. And there was almost like if people knew what I knew about this, they would want it. And so there's like that almost like I knew too much. And I was like, could I be successful in other careers? Probably. But I was like, man, like insurance, like if understood, it would serve and help so many other people. And trust me, that doesn't win us a lot of friends. It doesn't win us a lot of friends in the insurance space because people don't necessarily like our content because they feel like we expose them. But then outside, which is way bigger, people see what we do as a scam. So by your status in life decreased a lot when you shifted over to teaching people about infinite banking versus sticking to an investment newsletter. Like if you were
let me disagree. No, not in my case. So I'm not a contrarian by nature, but I always was in the investing sense just because, again, I was just looking for the truth, and the standard way of approaching it never made any sense to me. So when I say investment newsletter, we're talking about crypto, gold, silver, alternative financial assets. Okay. There were no standard financial assets in that newsletter. It was all off the beaten path. The vast majority of our gains came from crypto, altcoins, things like that, you know. So I got into a lot of that when I was exploring things, not because I wanted to go against the grain or because I'm a contrarian, just because the standard way just never made any logical sense to me. And I think when I'm trying to understand fundamentals, like what is money? What is wealth? Questions that people never ask, right? They just assume more US dollars equals more wealth. There's not a lot of fundamental questions. That's when I started getting into these alternate spaces. And it probably started with gold and silver, when I started learning more about what money actually is and why gold and silver have been money historically. That's what led me down the alternative path, which opened me up to Bitcoin, Ethereum. It opened me up to precious metals mining stocks. It opened me up to the infinite banking concept. So I was always in that alternative sphere. And I don't like being a contrarian, but these things make sense. Whereas the standard accepted way of doing things, in my opinion, doesn't make sense for the average person, and no real fundamental questions are being asked or answered.
So you're already open to a lot of alternative ways of investing, growing your wealth, and then you learn about infinite banking. And what do you recall, like the epiphany where you're like, oh, this makes a ton of sense?
There was no epiphany moment. I can't recall. It did take me a while, but I think when I first got into it, I thought it was about positive arbitrage, to be honest with you. Like most people, I didn't quite understand it when I really got into it. And it took me years of maturing to understand what it really is about. I thought it was, oh, I'm borrowing at 5% and I'm earning 6%, something like that, right? So I'm running all my cash flow through my whole life policy and then using policy loans to finance everything. So it's replacing my checking account, right? And there's a sense in which that is true once we understand opportunity cost and add some more nuance to it, right? So I think when I first got into it, I thought it was about positive arbitrage. It wasn't until I really started doing it as a business and getting deeper into the mechanics that I understood it's actually not about positive arbitrage in the strict sense. I agree with what you said earlier that it is about positive arbitrage once we broaden that understanding. So it's not like from a strict cash value perspective, I'm going to be earning more in the policy than the policy loan interest rate, although that can happen. That can and does happen. It's more about when I consider all the benefits I'm getting in the whole life insurance policy versus the policy loan interest rate. Then I can say, yes, there is positive arbitrage, right? Especially when we don't look at it in a vacuum, when you consider there are certain things you're probably going to need to pay for anyway.
Yeah.
And we're baking that into whole life insurance, like an obvious one being the cost of term life insurance, right? So if you don't want to have whole life, and you're a responsible human being, you're going to have term life insurance. There's a cost associated with that, right? Plus the lost opportunity cost on those premiums you're paying into the term policy is not just the cost of paying the term premiums, it's what you could have earned on that money. Because if it was in whole life, you're earning, right? So that might bridge us in the next conversation, which is that I'm, like you, Caleb, working on a series which is trying to determine what really is the true rate of return in whole life insurance when we account for all these other benefits? And what rate of return would I need to get in some market-based strategy, basically a buy term and invest a different strategy, to truly equate, to truly get all those benefits?
Yep.
An obvious one is the death benefit. So
Right.
if I'm going to invest in the market, I'm going to have to subtract for the death benefit.
Yeah.
Another would be the long-term care protection. That death benefit can be used in the case of a chronic illness. So we have to account for that also on the market-based side.
Mm-hmm.
What about the creditor protection?
Yeah.
Depending on your state, this is a protected asset. How would I account for that on the market-based side of the equation? I've got to buy a liability policy or something to account for that, right?
Yeah. And I'm sharing my screen. I rarely do this in interviews, but I think that this conversation is really important. And so I want to build a foundation for us to build upon. So this, if you can see my screen, this is just a $50,000 premium going into a policy that's max funded, kind of. Like what I'm not telling you is that this is the most optimal design. It's just for example purposes only. So you can see that $50,000 is going in. You can see the cash value the first couple of years is $39,000, and then the death benefit is growing over time as well. And you can see the IRR calculation. First year is negative 21%. And then in year 5, it's essentially zero, but it's 0.36%. And then year 6 and on, you see it started getting green. And as it goes up to 1% and over 2% and over 3%, that's representing not just that year, but every single year, including the negative year. So internal rate of return is an actual rate of return. I just proved that example out. If you look out over 30 years, you're putting in $50,000. You're at the future value of that is $3,233,085. And if you look at, over 30 years in the policy, it's identical. And that's assuming earning 4.58%. So that's like how internal rate of return works. And so a lot of people look at this and say, well, that's okay. It's better than a savings account long term. But like, what do we have to compare this to? And the only reason I'm sharing this is I've gotten like level 1, and what we're going to talk about, what you're working on is going to be like level 2 and 3. Is we take like, okay, if you assume a 30% tax rate. Now, some people watching this, they should assume a lower tax rate, 20%, maybe 15. But why is because I very much look at life insurance as a savings account alternative, like a safe place to store money, and the liquidity and access to that's valuable. So you pay ordinary income tax in your savings account, and so that's whether it's 30% or 22%, people can debate that. And then when you add a fee to that, that's just representing a lot of things. That fee could represent what you're going to talk about in a second is risk adjustment. It could factor in the actual fees a lot of people pay. It could factor in other benefits. And then when you factor in the cost of insurance, this slide, I'm not telling you that life insurance gets you over 10%.
No.
What I'm saying is when you factor in my case, tax rate, 1% management fee, and the cost of term insurance, now you need to earn over 10%, in this example, 10.69% every single year, over 30 years, just to give you the equivalent value of life insurance. And then when you understand that, you also get liquidity and access to that capital. What account out there, Logan, gets you anywhere near the accessibility of your dollars and gives you the 10% like returns? And that for me, when I'm like, I need to actually go deeper on this. And so that's what I'm working on, is how do I actually show more benefits and start quantifying those benefits into a rate of return calculator. And you're doing the same. And now I want you to share what you're working on. Again, it's not your, when you
100%.
So, but I think it's like,
I think that's great. And
I would love to have you back on. But like, you're even talking about, and I don't want to steal your thunder. So like, walk through some of the elements. And I think if there's nothing else that someone will get from this episode, it's understand the real value of insurance. Because if you're just looking at the cash on cash arbitrage and you're asking questions, what's the loan rate? What is my cash value earning? That tells me you don't understand life insurance. And if that's the only thing you care about, there's better accounts out there that will give you at closer cash on cash arbitrage, maybe with more risk, probably with more risk. But that tells me you don't understand life insurance. And the more you understand life insurance, I think the more you would want your money to flow towards this strategy.
Yep. I could not agree with you more. I think that was great analysis you showed there, Caleb. Thank you so much for that. Yes, I am thinking the same way. So I'm asking the question, what rate of return will we need to get in the market to get the equivalent benefit of what we're getting in whole life insurance? Because when they say the rate of return in whole life is X, they're only talking about the internal rate of return on the cash value of a life insurance policy, which is just one of the benefits that you're getting. So in my example, which I've already started publishing some of these videos, maybe we can link to it, Caleb. I'm saying, assume you're going to pay a $25,000 premium into a whole life insurance policy, and we're going to take the same $25,000 and put it into a market-based strategy, and we're going to try and equalize the two, right? So the first adjustment we need to make is we need to account for the cost of term life insurance. If I've got a death benefit over here, then I have to have a death benefit over here. And if it's not going to be a whole life policy, obviously it needs to be term, but it needs to be term with living benefits, because in whole life insurance, not only does a death benefit pay out when you die, but you can access that death benefit if you have a chronic illness. So in my example, the cost for a 35-year-old healthy male to get a 30-year term plus living benefits policy is $2,760 a year. So we got to subtract that from the $25,000 so we can invest less, because we got to account for that benefit. What about creditor protection? Depending on your state, whole life insurance is a creditor protected asset. How do we account for that over on the market side? Because your market-based investments are not creditor protected. Well, I subtract out a few $100s a year to buy a liability policy, right? To sort of account for that. Okay. Now, what about taxes? You accounted for that in your scenario. Whole life insurance is not going to be taxed if it's set up and managed properly. So assume a certain tax rate, let's say 22%. Okay. We got to account for that. Okay. What about a management fee? Even if you're buying index funds, there's typically going to be some kind of management fee, maybe 1%. Subtract that out. Maybe it's even 0.5% if you're just buying index funds, but you got to account for that, right? Because the rate of return we're getting on our cash value is totally net of everything. Okay. Then we make an adjustment for risk, an adjustment for volatility. Because over here, we're not taking on market risk. Our cash value cannot go down. It's guaranteed to go up at a certain rate every year. And there's no volatility because, again, it doesn't swing up and down like in the market, and only goes up. So we subtract a certain percentage for risk and volatility to equalize for that and see what we come up with. And in our example, after we made all of those adjustments and we assumed the market just got what the market-based investment got exactly what the S&P 500 got, right? So the S&P 500 over the 30-year time frame I was looking at averaged a little under 10%, which is about what you expect, right? That's your average rate of return, not your real return, right? And at the end of the day, what I found is the whole life policy over 30 years with that $25,000 annual premium, we ended up with about $1.7 million in cash value and $3 million in death benefit. On the market-based side, once we made all those adjustments, we had about 1.06 million. And of course, no death benefit, nothing else, because all that stuff expired after the 30-year term. So on the life insurance side, without taking on any market risk, we had 1.7 million in cash value, 3 million in death benefit. On the market-based side, once we make those adjustments to make it more of an apples-to-apples comparison, we end up with basically 1 million in market-based assets and nothing else. No death benefit, no chronic illness protection, no legacy, nothing. And another thing, there's two other things that are hard to account for. One is the policy loan feature. You say it has liquidity, and it does, and the liquidity, in my opinion, is far superior because I can borrow against that policy without asking a bank's permission on a guaranteed basis, and I'm not interrupting the earnings in the policy.
Or all the other benefits that you just mentioned that are not,
And the psychological benefit, right? Yeah. I've had clients, I'm sure you've had clients tell you how it puts them in such a much better mental state when they have this protection, we have this foundational asset. So you can now make better financial decisions. I've had this experience, and I'm sure you have too, Caleb. When you're in financial trouble, you make bad financial decisions. When you feel like, and you have to take on more risk, okay, and it gets worse. Whereas when you have money in the bank, when you have protection, good insurance in place, you can sit back and make the correct spreadsheet decision, right? But when you're looking at a spreadsheet, you're not accounting for all your emotions, right? If it were just a spreadsheet decision, then human beings would be like calculators, but we're not. So we've got to account for what is the right decision for you psychologically, not just what the spreadsheet tells you. Mm-hmm. And then, of course, with the market, there's always great uncertainty. Yeah, I agree. It is likely, it is probable that the market will perform at, let's say, 8 to 12%. I'm not disputing that, but it's not guaranteed. So there's a psychological element of uncertainty that we need to account for. And I think it comes back to position sizing. I think most people are investing way too much of their money in the market because they view that like it's a savings account. It's not a savings account. It's an investment account. And it's okay to invest, but maybe take a smaller percentage of your money and move it there and have a larger amount of money in cash, even if you don't use whole life insurance, even if you're just keeping in a savings account or in gold or whatever you think is a safe, liquid, accessible pool of capital, do that. And you will end up much better off over the long run, even though your rate of return on paper is going to be lower.
Yeah, I think that's well said. Most people have no idea where to start or how to really evaluate whole life insurance. That's why we've built the Vault. It's all of our best life insurance resources and educational tools all in one place, all for free. We have calculators, handbooks, crash course, deep dive videos on numbers. If you want to learn more, click the link in the description or tag comment below to unlock the Vault. All right, back to the video. Do you have a guess on what your returns are going to show after you're done with this?
Well, so I think your 10.67% number is very good. I think it's going to be somewhere between around 15%, 12 to 15%, let's say, is what you're going to need to gross in the market in order to match all the benefits you're getting in whole life insurance. And again, it's assumptions based. There's no way we can make it truly apples to apples. The nice thing is if you build the model correctly, then you can allow people to tweak it because a lot of people that I talk to put a really high value on the long-term care protection. So if you do that, maybe the number's even higher. And for those people, it might make sense to put more money in whole life or maybe even take out a separate, very robust long-term care insurance policy apart from whole life.
Yeah. Well, I just want you to know when you go through it, I would love to have you back on and for us to meet it up together. I'm sure our community and fans would very much love to give you their 2 cents. So
I'm sure they will.
Let's talk about the infinite banking community and just tell me. I mean, when I went on your show, you were kind of I wouldn't say you didn't want me to be pressured into anything. I explained to you why I became a practitioner, not mainly out of respect. For me, it was because I didn't want to take the test, and I finally just sucked it up and went through the test. It wasn't that hard, but I just part of me is just like I just don't like going through the test. I don't like being told I have to do certain things. Mm-hmm. So that was like why I held out. And I know that there's some people that are very, they feel very religious about it. Like this is the only way. And then there's people like myself, and I know lots of other people that are practitioners that are doing it for the same reason. Out of respect, they like the community. They really, really appreciate Nelson. Like, I am a result of being here because of Nelson wrote a book that helped became the gateway. And so I could appreciate all that. But what I'm not doing is I'm not saying, well, Nelson said to design a policy this way. And so this is the only way to go about it. And what I'm not saying is, the only reason I'm doing infinite banking is to abolish the banking system because fractionals are like, I can agree that that's not good. And I'm also like realistic to say like infinite banking is actually not going to overturn the system. And I don't even know at its purest form if that's the greatest solution, if your whole goal is to undermining fractional reserve lending. And also all that to say, like, those two things can be true together. But I have I'm very grateful for the memories, and I'm a better person because of the Institute. But I also know within that they've blacklisted some people and maybe pushed some people out. And I know that you might be one of those people that identify as that. So I know in the past we were like, maybe we're going to get together a debate. This is me publicly saying, if there's other people on the other side that want to come together, I'd be more than happy to host a roundtable. But Logan, I would love to hear your thoughts on just your journey through that.
Yeah. So first of all, I fully support the mission of the Nelson Nash Institute. I think infinite banking is great. We certainly owe a debt of gratitude to Nelson Nash for discovering and promoting this infinite banking concept. He was really the lone voice in the wilderness for a long period of time. I respect his dedication and his perseverance in going it alone. So I'm certainly not opposed to the Nelson Nash Institute. Certainly, I support their mission. Let's put it that way. And I personally joined the Nelson Nash Institute. I paid my dues, I passed the test. I think I passed at the highest rate at that time. I got a 99% best score on the test. And then what happened was they kicked me out for something that had absolutely nothing to do with the infinite banking concept. At the time, as you recall, I had two separate businesses. I had my investment newsletter and I had my infinite banking concept business, and I ran them as separate businesses. And they got hold of some advertising copy that hadn't even been published yet, but was about to be published on the investment newsletter side, and they didn't like what I was saying. And I got called a lot of names. I got some pretty nasty emails, and they summarily kicked me out with no discussion, no adjudication, no conversation, not even a phone call. And again, it had nothing whatsoever to do with the infinite banking concept. So I still am at a loss as to why I got kicked out, quite frankly. It wasn't like I was trying to sell IULs or bait and switch people. I was breaking none of their rules. So they at least had the decency to refund me my membership dues because they recognized I hadn't broken any of their rules. I had not done anything wrong. But they just didn't like me, I guess. I still don't know the answer as to why I was kicked out, to be honest with you. But it was a blessing in disguise, I think, because it then freed me up to think more creatively, to not have to follow one particular method. What you'll find with the Nelson Nash Institute, or at least my experience, is that there are a lot of unwritten rules. If you look at their written rules, there's really nothing I disagree with in terms of, I think everything they lay out is very reasonable, right? They're not dictating to you how to design a policy. They're just saying, hey, if you're going to use our banner, don't sell IULs, because Nelson didn't want to. Hey, totally
Not
fine.
even,
No problem.
don't sell IULs. Don't sell IULs like you're going to do it. Like, don't sell infinite.
Right. You can still sell them separately. Yeah.
Which
In
I think
theory.
is very generous.
Like, yeah. So I have really nothing against their stated rules. I wish I had prepared for this. Well, I'll say this. I have a lot of fear right now, to be honest with you. And that in itself indicates there's a problem. When I speak with people about this, there's a lot of walking on eggshells, right? A lot of people, a shockingly high number of people in the Nelson Nash Institute itself agree with me, but they're afraid to speak up. That alone indicates there's a serious problem. There is a culture of fear in and around the Nelson Nash Institute, where if you dare to say certain things, there will be negative repercussions for you. And they come after you with, as an example, cease and desist letters. So, Caleb, I heard you saying that free speech is your main issue. Well, my question to you is then why are you a member of an organization whose mission seems to be to militate against free speech? by using cease and desist letters. So they'll come after people who they believe are using 3 words of the English language, infinite banking concept, in a way that they don't agree with. I don't see how anyone can own 3 words of the English language. And I don't agree with the methodology of bullying people.
Mm-hmm.
I had Stefan Kinsella on my show to talk about the problems that this invites. And he used the word extortion, which I hadn't thought of. But as I thought about it more, I realized he was right, because you do have to pay a membership fee, right? There's a sense of extortion where your livelihood is at risk if you don't pay them the extortion fee. Because then if you go on and start doing infinite banking, they potentially will come after you with government force, right? So it's at least a bit hypocritical, because there's a very libertarianish streak that goes through the Nelson Nash Institute. It's kind of hypocritical for people who claim to be libertarians, or even anarchists in some case, to then use government violence to shut down their competition. It's fine to call them out. I have no problem with that.
Yeah.
Call them out as forcefully as you possibly want, but just use words.
Yeah.
Don't use government violence. Don't be bullies.
Yeah. What I'll say to that is appreciate your insight. I would say that I'm not a fan of using letters. In fact, when I got one of my only cease and desist letters ever by Curtis Ray, I made a video against what other people told me I should do. They said, don't, like, but I'm like, I was so bothered and annoyed by that I'm like, no, I didn't do anything wrong, and I'm going to expose this. And what did that do? That created more conversations. And some people said, I wish you wouldn't have Curtis Ray on. That's super hypocritical of you. You're calling, but I'm like, no, that's the essence of what I believe. And so what I would say is I would do the same thing if I received a cease and desist from any institution, including one that I was even a part of. But I also am like in my nature, I'm a very forgiving person. And I very much want to, I believe we're better if we're rowing together. And that's the answer there is like, I'm a part of the Institute because first and foremost, my dedication to just and gratitude to Nelson. And so it's like one of those like, hey, really, really grateful. And it's just one of those things where if I look at the organization, instead of saying, do I agree with 100% I don't agree with 100% of anything. Like there's not one person I'm friends with, including my wife, and I'm like 100% agree across the board on everything. Does that mean I can't be in a relationship with them? Does that mean I can't break bread with them? Does that mean we can't serve and help a lot of people? No. And so that's maybe I take a more liberal or forgiving stance on that. But I look at this as saying, hey, if there's things that I want to see changed, why don't I see if I can change it within, but also have the boundaries in place where I'm not going to let someone bully me behind the scenes. And I would be willing to walk away from something if that was the case. And so that is neither of us have maybe perfect answers, but I think it's a good dialogue. And the reason I'm mentioning this is I think we need to have more conversations about this. And I would love to hear all perspectives. And my question to you would be, if there was a chance for you to get back in, would you just say, hey, I've seen enough. I don't want to be a part of the organization?
Yeah, at this point, I would not come back in. I'd say a couple things too. First of all, the whole ethos behind what most of them will do is they'll have in their email signature on their website prominently displayed, I'm officially authorized by the Nelson Nash Institute. I've heard a lot of them criticize people who advertise their CFP or their CPA or whatever label they have. And I agree, we shouldn't use labels or credentials as a replacement for actual value add, right? And so what they're doing is what's common to most of us is you become what you hate. You become what you hate. So they are totally opposed to this. I've created this artificial label of I'm a CFP, so that puts me in a different category and I'm better than you. And instead of just being against that, they instead create another artificial label, which says, well, now I'm officially approved by the Nelson Nash Institute, right?
Yeah.
And by their own stated public admissions of prominent, officially authorized Nelson Nash practitioners, there are people officially authorized by NNI who don't do a good job and who raise some red flags with some of their business practices. So it's not an imprimatur. It's not infallible. And I think that sort of mentality is dangerous because it leads people to not try to add value and to not really think and vet the person they're working with, right? They just say, oh, he's officially authorized, therefore it's fine. Or, oh, he's a fiduciary, therefore he's acting in my best interest, right?
Yeah. And here's what I would say is at the time of recording, the Nelson Nash Institute has just under 30,000 subscribers on YouTube. They're growing with a lot of momentum, and I'm really happy to see that, because I think what would be way more valuable is for them to use the power of the internet and freedom of speech to call people out. Like, be like, hey, so-and-so, like Caleb did a video, I disagree with this. And maybe, it'd be nice to be like, maybe send me an email before and we could, but at the end of the day, it's like, use that platform and let the market decide. And I think that's my hope with where things will go in the future, is to use their platform and to do it, calling people out instead of using.
And why not focus on the positive, right? I mean, they can call people out, but in my opinion, it should be more about supporting and encouraging and building as many infinite banking practices as possible. And if you need to call people out for misusing it, fine, do that too. But it shouldn't be. They shouldn't be trying to be policemen, right? That to me is a futile
if I can
exercise.
play devil's advocate for a second, I think there's a lot of people using infinite banking in a very bad way, just like a really
and they can call them out. That's fine. I have no problem with that. I have no problem with that.
So and again, like, I personally would not go to the legal route. You wouldn't necessarily go that legal route either. But that is a route. And while we could debate if it's right or wrong, I think what they're trying to do is they're trying to create purity in what Nelson created. And they don't want someone to slap the concept and then mislead people. But I just don't feel like that's a winning solution across the board. But I think their intentions is right. I don't believe the intent is wrong. If I did, I would not be a part of it, the organization. But I do believe their intent.
We can never judge intent.
Yeah,
we can never judge intent. So.
You can judge intent. You might not be right, but you can try to judge like what someone's intent on this. And again, like you'll never know. Only God knows. Only them and God knows. But if I perceive someone's intent to be X and it wasn't positive, then I would think differently. And so that would be almost how I would summarize.
I will say that I have a lot of emotional trauma and PTSD from the way it was treated. I have to be honest about that. It's a combination of my health issues and all the things I've been going through. And that was the way that they treated me was totally unconscionable. And it really traumatized me at the time. This is when I was new in the business, and this is coming, from people that I thought were there to help me. And they behaved like a bunch of adolescent bullies. And so I will say in my particular case, even if their message is 100% true and everything they're doing is correct outside of my personal experience, I can tell you my personal experience is I was emotionally traumatized. I was bullied. And I'm going to call them out for that. I'm going to call them out, and I called them out by name in our video. And I'm still afraid, honestly, Caleb. I'm not, I still have a lot of fear. I'm afraid of the repercussions from them. They have power, and they have shown from my own personal experience that they are not afraid to use that power as bullies. And so they might send me a cease and desist letter. I don't know. I'm not at the stage of my business where I have legal teams that can, handle all that. That can be a very scary thing.
Yeah.
And I know from experience that they are not afraid to use their power to bully people. They personally bullied me. What they did to me was totally unjust. Okay. Now, outside of that, maybe they're perfectly fine. I don't know. Yeah. But I do have a lot of fear in even having this conversation. Okay. And I know there are a lot of people out there who feel the same way, where it's like when I maybe try and have a conversation with them, like as an example, I recorded an episode with someone else I respect in the industry a lot, having a frank conversation about this. And after that, he sent me a note and said, please edit me out. That indicates there is a serious problem. Yeah. The Nelson Nash Institute has created a culture of fear and intimidation. And that is extremely, extremely negative. No matter how positive their message might be, there's no question at all that they've created an atmosphere of fear and intimidation and bullying.
Yeah. Would you be, I want to move on. Would you be willing to have an open conversation if we bring someone else from another side?
Maybe. I'll say maybe. Okay. I'll have to. Okay. Maybe.
Right. Well,
it would depend on the circumstances.
I feel like, and again, I 100% appreciate your bravery even sharing this. And I know you've had videos on your own channel, so it's not like the first time you've mentioned this. And I hear you, and I also I can very much hear the other talking points, and my desire is I don't want anyone in the space that's trying to help people, truly help people live in fear. I don't think that would be their intent, and I think if someone's honestly watching this, they would be horrified that someone's in fear. And then on the flip side, I think like we all can be challenged from a standpoint of saying like, hey, are some of these things warranted, and is there areas where we bury the hatchet or not? But I think we can move on, and we'll see.
Let's move on.
Yeah, we'll see what the future looks like. Last part I want to talk about is convertible term, and you have you've told me before we started recording that you've been selling. You're like more known for convertible term than anything else, and that's because of the philosophy around human life value. I want to give you just like the space to be able to articulate that, and then I just told my next meeting that I'm going to run a little late, but it's amazing how time can fly, Logan, when we're chopping it up. So,
time flies when you're having fun. So human life value. What is human life value? So the insurance company, they look at you, and they're not going to give you an unlimited amount of death benefit. They measure it by, if you die, what is the measurable financial loss to your dependents? And that's basically the loss of your income. So if you're a father who's married with a stay-at-home wife and 2 children, you're 35 years old and you make $100,000 a year, let's say. They're going to say, if you die, what is the loss to your wife and 2 children? Well, they lose your $100,000 of income projected over your working life, which in this example will be 30 years. So it's $100,000 times 30. That's $3 million. That's your full human life value. That's the amount of insurability they'll give you. That's the amount of death benefit they'll give you. And the insurance company is deliberately underestimating your human life value because they're the ones on the hook to pay if you die, right? Just the same as if you total your car, the insurance company is not going to overestimate what your car is worth when they pay you. So you can look at it from that standpoint of, this is the loss that I'm protecting against, but it's also your future net worth should be $3 million if you play your cards correctly. Over the next 30 years, you should build $3 million in net worth. So why don't you secure that today on a guaranteed basis by taking out a $3 million convertible term policy? You just put the first stake in the ground and built a rope ladder, a bridge to that future $3 million net worth, where now you know you're going to get there on a guaranteed basis. That's the first step. That term policy is convertible, meaning you can convert it to whole life without underwriting, and you can convert it in pieces. So no matter what happens to your health, now you have the ability to convert to $3 million with a whole life. So the next step is you start filling in the cement on that bridge by converting at $3 million of temporary death benefit to permanent death benefit. So now that $3 million becomes real, it becomes permanent. And step 3 is, over time, that $3 million of death benefit becomes liquid and accessible to you in terms of the cash value as the cash value grows. So step 1 is you have a $3 million temporary protection. Step 2 is you have $3 million of permanent protection. And step 3 is you have $3 million liquid and accessible to you today. And you did all of that on a guaranteed basis without taking on any market risk.
And what I love about what you talk about is convertible term is very much the bridge to making that reality happen. And it's like in the investing terms, you're almost buying an option,
correct,
a cheap option that protects you, but then also gives you the ability to realize that.
Correct. Guaranteed future purchase options. It gets you optionality. We could talk all day about that. I don't know how much time you have left, but convertible term policy gives you optionality more than anything else. Don't assume you can get a whole life policy anytime you want.
Yeah.
It's not a guarantee.
And I also think you've become a lot more thoughtful because of the health challenges that you publicly shared. And it makes, a lot of times you don't always appreciate things until it's made aware. And so that would be my request is, if things are always maybe more valuable if you can't get it, and don't try to assume that your health is, don't take that for granted. Whether you buy life insurance or not, just the time that we have on this earth is so valuable and precious. And anything that you do that enhances the value in your time is it's beneficial. Anything that you do with your time and money that devalues your time I would just say eliminate that. And that's probably one of the reasons it's impossible to even calculate that. But that's one of the reasons I'm a fan of insurance and proper planning, is I want people to live intentionally. That's a big part of what we do here at BetterWealth. But I want to elevate intentional living.
One of the things I would say is, I think my insight into the infinite banking community is that convertible term is part of your infinite banking system. It's not a supplement to it. Some people talk about convertible term like, well, we're going to supplement the death benefit on the whole life policy. No, actually, convertible term is part of your infinite banking system. The purpose of case design, if we're building our private banking system, is to secure for you the contractual right, but not the obligation, to pay the highest possible premium for the longest possible time frame. There's a lot more we could get into there, but convertible term secures your right in the future to pay that premium. What if it comes time to expand your system and you apply for a new whole life policy, you get declined? Now you're done. That's it. But if you have that convertible term policy in force, you've secured that right. So it's not a supplement to your banking system. It's part of your banking system. And I think that's one unique insight that I've had that I think is valid, that builds on the foundation that Nelson started.
Logan, I really appreciate your time. I know that there's a lot of open loops that we've probably opened. I want to have you back on when you go through when you built that calculation around how do we elevate life insurance value? And I just cannot wait to hear the criticisms, the comments, because I believe that articulation is huge and we all learn from that. And I think we need more people talking. And so I just want to commend you, what you're doing on LinkedIn, what you're doing on YouTube. We'll link all your stuff down below. Is there any final words that you want to say as we wrap this thing up?
Caleb, it's an honor and a privilege to be on your show. I thank you so much. I'm very humbled to be on here. I feel like I'm standing next to Michael Jordan, and I really, really appreciate the work that you're doing and the openness and the abundance mindset you've had in helping me and having me on the show. We could view each other as competitors, but people who have the abundance mindset don't think that way, and the successful financial professionals don't think that way. So I commend you for your work, and I'm deeply humbled and honored and grateful to have been on your show with you. Well, thank you so much.
I just want to say one thing about abundance. When I first started having other people on, I'm not going to lie, there's part of me that was like, is this going to be a mistake? And what's interesting is their business grew and our business grew. And that's a true definition of abundance. Abundance is not me growing.
It's not a zero-sum game. It's not a zero-sum game. It's an exponentially increasing game.
Yeah, which is ironic because even the more marketing, the more messages, the more videos actually helps everybody, because you might see like, hey, someone's winning more. Okay, but there's more exposure, and by more exposure, and there's a lot of work for us to do. And I'm grateful for your kind words, but I do not. I am only here because of the many people that came before us. And I am very grateful that there's more than one person that listens to us on a weekly basis. I'm grateful for all of you that subscribe and that comment, that challenge us. But Logan, I appreciate you because you comment on a lot of our videos. You're watching, you're challenging me. And even our pre-conversation, we went back and forth talking, and you challenged me on a couple of things. I'm grateful for that. Like, I'm going to be better for that. And so excited for what's to come, and excited to have you back on.
Awesome. I'm looking forward to that so much. Thank you, Caleb.
Take care. If you're a high income earner or own a successful business, you're already creating real value in the world. The real question is, are you keeping that money, protecting it, and growing it the way that actually supports your long-term goals? At BetterWealth, we help people like you better keep, protect, and grow their wealth through various tax strategies, estate planning, specially designed life insurance, retirement planning, and even a fractional family office service. If you're interested in one or more of the areas we can serve and want to learn more, the next step is to book a free clarity call with us. Click the link in the description or tag comment below to get started.